On the interview show today, we have John Fieldly, who is the CEO of Celsius. Just in full disclosure, I'm a shareholder. I own Celsius shares, ticker symbol CELH in my personal account, as well as my social capital fund. So I've been buying shares since last summer when the stock was in the mid-teens. I buy into the story. I kind of call you guys like the next Monster, for better or for worse. For people that don't know, Monsters, was one of the top performing stocks over the last 20 years. But I personally drink 2 or 3 of these a day. I think it's a much better product. The energy drink category is somewhere around $60 billion a year and growing at 9 or 10% a year. And, we're going to talk more about Celsius's strategy. And I know you guys just reported earnings yesterday. The stock dropped a little bit. I think people were looking for a bigger blowout number, but I think the fact that, we were still in a pandemic, the vaccine rollout wasn't happening. There's still not enough foot traffic coming into the retail stores. A lot of gyms are still closed. It makes sense that the number wasn't blowout, but looking at some of the Nielsen data, it looks like things are picking up pretty nicely in Q1. So why don't we kind of start there? Why don't you talk to us? What is Celsius? Why are you guys different? And then we can talk about your strategy.
Love it. Thank you, Jonas, for having us here. Really appreciate it. Thank you for being a big fan. We're excited. Like you mentioned, a lot of momentum there. We have a great product. If you don't know about Celsius, it has 7 essential vitamins. Actually, is a thermogenic, burns calories and body fat. We were born in the gyms, health clubs, and really over the last several years, making this transition out into grocery, mass, and drug. And we really see a sizable opportunity right now in the convenience channel. Now, keep in mind, 70% of energy drink sales are sold in convenience. So we're really backdooring this system, which we're pretty excited about. And we've just brought on about 150 distributors, really, unfortunately, right during and before the pandemic. So we're working on optimizing them right now and flipping over key accounts. So there's a lot of great things going on in the company. I thought it was a solid quarter. We had an amazing year, broke 130 million in revenue for the year, solid gross profits. So we're really proud of what we delivered, and we're really excited on where we're headed. So, a lot of that scan data you're talking about that most recently, if you look at what's happening in the quarter, really strong scan data in Q1 2020 that's being reported. And we had strong scan data in Q4. I mean, if you look at that scan data, it was running, I think it was Nielsen as of December 12th, was right around a 70% growth rate in retail, as of the trailing 12 weeks. And we put up a 66% growth number in North America. So pretty much in line, solid there. You're right, fitness channel is a big bulk of our business, and that's been impacted with the pandemic. Other thing was vending. At a lot of these at-work locations, pre-pandemic, we were gaining a lot of traction at micro markets and at-work locations. And, that business dried up as well. But we've been doing really well on Amazon and some .coms, so that's offset some of the growth there. But all in all, put up 66% growth in North America in Q4 and had a great year. And we feel we're well positioned. And
74% year over year for full year, right?
That's right.
And gross margins also expanded, correct?
That's right. Yep. What we saw really in the fourth quarter on the margins, we did see margins increase there, and it was really promotional allowances in Q4, as well as we had some increases. We have a European business that we have, and due to the dollar currency, we picked up a couple points with the dollar against the euro. But we do feel there's going to be margin impact going forward with this can shortage we're dealing with, but we feel we're well positioned. There's a lot going on there in the industry. But the best thing is, the traction we're seeing in traditional retail for Celsius is just really monumental. We got some great team members on board, gaining new distribution, getting better placements, and we feel we're going to be a major player.
So over the last few months, as I've gotten very bullish on Celsius on Twitter, people love to send me pictures of their local stores with, limited supply on the shelves. And I think people need to understand it's not necessarily a supply issue. It's been more of a kind of logistics distribution problem, but now you guys are going DSD, right? Which is direct store delivery. So now you can make sure that those distribution partners, the 150 of them that you said, are going into the stores and the product is getting on the shelves, and merchandising and product placement and everything is set up the way that you want it, right?
Yeah, that's really the benefit, right? So when you're in the beverage industry, especially in energy, consider it's really a street war. You win it's a war at the retail shelves. And historically, really up until we started in really mid-year 2020, all of our product was going direct to retail. So what does that mean? We ship product on a pallet. It goes to like a DC at Target. And then the DC separates it and sends it in trucks going to all the Targets. And then we rely on the Target employee or the retail employee to keep the shelf stocked for Celsius. The good news is we're selling at a high velocity. The bad news is the store employees don't really, maybe worried about other items, especially during the pandemic, toilet paper, maybe some other items that are trying to keep in stock. And they know most of the beverages are really serviced by DSD. So it's a third party coming in and keeping those shelves stocked. So a lot of employees really will not do anything with the beverages in the back room because they rely on someone else to do it. So we've had a lot of out of stocks when products just sitting in the back when we do store checks. So you're right, going to DSD, it's really that white glove service. So those DSDs they're incentivized to sell more Celsius and to keep us in stock. And they'll keep us in stock, in placements, also get us cold availability versus when we're going direct, we run it. What happens is you're out of stock. Then the Coke, Monster, DSD partner comes in, they rip off your tags, take your line time, and then you got to refight or you got to wait for the next shelf reset. Wow. So that happens over and over again. It is literally a war out there, especially in the energy category. It is a very aggressive category. So DSD is critical in order to take this company to the next level.
I agree. The other thing that I thought was really cool and should be a nice catalyst for you guys is branded coolers. So I think you said that there's 200 deployed right now. There's another 1,200 on the way. And some of those stores that have already gotten the branded coolers are already seeing a 200% increase in sales. And then that's going to give you guys a 3-month payback on essentially the upfront cost of the cooler, right?
Yeah, that's right. I mean, the product is really resonating with consumers, and introduction on the product, how it tastes great as well. No crash, no jitters. But our consumers, I mean, the opportunity's there. Health and wellness is key. With Celsius, you get a great experience. It's not like many other products on the market, that you feel anxious or you get a nice feeling. It's no crash and great experience with the product. And that's why we continually get those reorders with customers. So having those coolers in that prime placement, just like on Amazon, I know we didn't touch on that, but we're the third largest energy drink brand on Amazon, 0.2 share behind Red Bull. So when we put those coolers in the front checkouts or in prime locations, we sell at the same velocity, if not better than those major brands. So, once we tested it, we got 200 that have been placed. We have 1,000 on order. We've tested it. The algorithm works. We need to put more coolers. I mean, consumers want the brand. And unfortunately, a lot of our sales today are sold warm. So we're driving all this revenue with warm. I mean, 70% of energy drink sales are sold cold. So our consumer, is really drinking Celsius as part of a daily lifestyle, daily routine. They're buying it warm, taking it home, chilling it, and then drinking it. So as part of their daily lifestyle, which, that's very difficult to do, especially when you're growing.
Right. It's not convenient for them. Right. Way more convenient just to walk into a store, grab it cold out of the Celsius cooler. And then since you guys have so many different flavors, it gives you a chance to display all those flavors in the different slots.
That's right. And what we've noticed at Celsius, which is really unique, I know you're drinking a peach vibe, and I have a great taste in orange. We have a great flavor, number 12. Oh, he's double fisting there. I like that. That's great. That's great. We have, over 13 great flavors. And what we noticed, though, we don't have a single flavor that's like the leader. Like Monster's got the Monster Orange that drives the bulk of the revenue. We noticed when we put Celsius on shelf, each SKU really turns at the same velocity of the others. And as we add more SKUs, it increases at an increasing rate. So we're learning more about how consumers are interacting with the brand as we gain more distribution. But we need to get full shelves across the country. There's no question about it. And the velocity's there, and we warn it.
Now, who are some of your biggest retailers? And then talk about the convenience channel, because I know you guys brought on Speedway as well,
yeah.
Right?
Some of our biggest retailers, I kind of walk you through some of the channels there. I'll start off in fitness because that's where we're born. So it's 24-hour, Gold's Gym, Equinox, Barry's Boot Camp. Those are, we do really well. We're really partnering right now with F45. It's a great chain as well that's been growing. And then if you look at, the drug channel, CVS, you're going to see us big in CVS in a big way come summer. We do really well there. We are in some Rite Aids as well, but CVS and the drug trade. Grocery, check us out at Kroger, HEB, Publix in the Southeast. I know you're up in the Northeast there, so Stop and Shop, Hannaford's, you can pick us up there. We do really well. And then also, when you look at the mass, you're looking at Target. We talked about Target. I mean, do really well in Target. A lot of opportunity in those locations. And then you mentioned Speedway just coming on board. Racetrack, we do well. QT, we're talking to Sunoco, Circle K as well, and many others. So
I think you guys are in Costco too, right? Costco?
We've started to work with Costco in certain divisions, and we're hearing that a lot. That we're popping up.
I'm seeing some big displays. Yeah, people are sending me pictures of big displays inside Costco.
Yeah, no, it's good. We got a 15-pack there with three great flavors in it. There is a lot of good stuff going on in Costco. Come check us out at Costco. We're in a variety of different divisions. We're in the West, the Southeast. I believe we're in the Northeast as well, and picking up some others. So, we're gaining more distribution every day.
Now, I know we talked a lot about the liquid cans. You guys also do some powder stuff too, right? And a few people have asked me, is powder a bigger opportunity while there's an aluminum can shortage? So I'll let you answer that.
Yeah, no, absolutely. And someone just posted Sprouts. I love Sprouts. Sprouts is a big customer. We started off in Sprouts with 2 flavors on the dry shelf, went to 5 flavors. Then they put us in the cold cooler on the side by the sandwiches, open air. And now we're at all the front checkout. So Sprouts is dynamite, fresh market as well. But looking at the powder product, we got 5 great flavors. It is the same as what you're drinking now, or Core Celsius, just without water. And actually, it's doing really well. It's on the go. It is a small piece of our business. The bulk of our business is the RTDs and the cans. So, but we're seeing a lot of people mix it in smoothies. It tastes great. Do some great flavor combinations as well with that. But the bulk is the cans. And you talk about the can, shortage. There is a massive can shortage right now due to COVID. It has to on-premise bars and restaurants closing, people drinking fountain drinks went to buying cans, and, the spiked seltzers have taken off in the industry. So there is a crunch on cans. All the can manufacturers are running like 3 shifts, full capacity, and turning people away. So unfortunately, we've had to get creative. The good news is we are creative, and, we put a bunch of lines out. We have cans available. In Q1, we've been wrapping cans. So you'll see a lot of product out there with wraps. It looks good. I got a wrap on this can here. Still looks great. Same great taste, same great ingredients and great product, but it is wrapped. It does cost us a little bit. We've said it's going to impact margins. We will be getting cans in. We have cans coming from our European partner and our Asia partner landing right now at ports. Actually, Savannah Port, we have 75 containers of cans arriving. We have cans waiting over in LA port that's been hovering out there in the ocean for 4 weeks now, waiting for a ticket to undock. So we have those things going on. We're getting cans from the US. We're also getting cans from Norway, Canada. And with the growth rates that we have, we want to make sure we have enough cans to service. So absolutely, we are going to be impacted a little bit just due to the increased costs with containers and managing that. But we're keeping up. We're going to keep up with demand, and it'll set us in a really good position for 2022. So we feel we're in a good place. We're generally available, just like any growing company. We do have some out of stocks on certain flavors that happen here or there as certain flavors spike 300%, 400%, 200%, and eat up some inventories with timing of cans or wraps. But I think in general, the team's doing a really good job keeping majority of products available.
What's going on with international? Where do you see the most opportunity? I think you guys are in Europe and Asia right now, correct?
Yeah, that's correct. We have a licensing royalty agreement with our partner in China. We also have a team of 3 people based out of Hong Kong. We have some distribution in Hong Kong. We're seeding some product in Malaysia with a distributor right now. We're in about 2,000 retail locations, really impacted by COVID though. I mean, a lot of lockdowns that have taken place. So it's been tough, but the team's done a good job. We're, seeding the product in gyms, health clubs, and some retail locations. But, our main focus is North America. We also have our European distribution partner, our European business, and some great distribution partners over there. We're in Norway, been gaining some traction there over the years. We're in Finland. And then in Sweden, we have about a 8.5% share. So that's the bulk of the revenue, and international is coming from Sweden, where we do really well. We're looking at the UK, Germany, Russia, a lot of opportunities. But methodical approach. I mean, if you looked at us and if you followed us for the years, we've been very focused on growing profitably, like profitable growth for our investors and shareholders. So that's something we continue to do. We're very methodical in our approach. But the bulk of the effort right now is in North America and continuing to grow throughout the Nordics.
So how do you guys look at sales, marketing, branding? I mean, you're going up against some very, very large companies that have been around for decades in most cases. You know, you're still a smaller company, market cap around 3 billion, 3.5 billion. What do you do that's different? I mean, do you work with influencers? Are you doing TV commercials? I mean, online banner ads? I mean, where are you guys seeing the most bang for your buck on the sales and marketing side?
Yeah, no, absolutely. I say this all the time. Listen, we're always going to be outspent. We're going up against the biggest CPG companies in the world. We got to outmaneuver and we got to out execute. And that's what I thrive in, being nimble and aggressive and constantly learning, you know, what are we doing? What are our goals on what we're trying to accomplish? And then once we complete the goal and task, how do we optimize it and get it better? And that runs through the whole organization. Marketing, we've had a lot of competitors coming after us, so I don't want to get into specifics on that. I noticed on our earnings call, we had several competitors from other brands that were on the call. So I got asked that same question. And, you know, since everyone's copying what we're doing just organically, which I noticed, I don't want to get too deep into that, but yeah, social media is key. If you're not on social media, you know, I don't think anyone sees you, especially during this pandemic, but we partner with influencers, brand ambassadors. We do a lot of, we're big on experiential marketing. Unfortunately, with COVID, we can't do that. So we've done a lot of product drops. We've given out over 500,000 cans to first responders, COVID testing sites, firefighters, police officers. We were doing drops in the early of the pandemic at hospitals, but then the hospitals told us to stay away. So then we repivoted, started dropping off at doctors' offices, even a variety of different locations. And,
awesome.
Keeping the gyms, our partnership, we want to stay close to the gym. That's our core, and helping out trainers as well. So there's not one thing that really turns a brand into a great brand. It's a variety and it's a combination of a lot of great things that come together.
How are the gyms doing? Are you seeing the gyms come back? I mean, I know a lot of them shut down for 3 to 6 months. And of course, some of them went out of business, but did the majority of them, are they coming back?
Well, it was interesting. In the fourth quarter, we actually saw our gym business increase 22% versus the prior year in Q4, which was really great to see because it was really hit hard in Q2 and Q3 of 2020. It looks like it's coming back, but there's a lot of things are still happening. We're seeing other governments in certain states really put lockdowns. In the Nordics, Sweden was pretty much open through the whole time, and now they're talking about lockdowns, especially relocking down Finland as well. So it's really in flux. In LA, they're doing outside gyms now. We'll see how that progresses. It looks like it is definitely coming back. We'll see how it progresses. Everyone's optimistic in the gym channel. If you talk to a lot of the chains as well, everyone's really excited. They feel, listen, going after this pandemic, when it's all over, health and wellness is on everyone's mind. I mean, it's
sure.
if it's not on your mind, you're walking around with masks that remind us about health and wellness, and we need to, health and wellness is key. What we put in our body. That's what's great about Celsius. We're a healthy energy drink. We offer ingredients, different functional ingredients and benefits. And, it's something that you need to drink as part of a daily, healthy, active lifestyle. And that's what we're all about to our core. So we feel we're well positioned, especially on where consumers are going with their mindset and what consumers are looking for.
It's funny because, I mean, not that I would ever sit here and drink a Red Bull or Monster. I think that's insane. And I think they're garbage products. But I would usually sit here at my desk and while I'm trading all day and drink iced coffee. And now I tend to gravitate towards a couple of these a day. They're lighter, they're fruitier. I actually like the flavor versus iced coffee. So I'm happy. I think you said, or in the press release for Q4, I believe you guys said you're in 82,000 US stores right now. Is that, when was that number from? Is that from the end of Q4?
Yeah, that's as of Q4. We're authorized in 82,000 locations in North America. We were hoping to be in a lot more in 2020. I mean, we were hoping to really be north of 100. Unfortunately, due to COVID, all of the resets were delayed. Back in 2019, I remember sitting at NACS, which is really an annual event in the convenience channel where buyers and all the brands get together, and buyers are really thinking about their resets for 2020. And we were really excited on where we stood. Performance energy was a new thing in the category that was coming. A lot of retailers were adding shelf space for that. And then the pandemic hits in March, right before the resets, and a lot of the retailers didn't reset their, their shelves. So the good news is it's all happening in 2021. And even with that, we put up solid numbers for the year. Same store sales growth is really strong. And we feel we're in good position on the next resets. We're looking at like March, April, May is when a lot of retailers are resetting shelves. And I know I called out some retailers earlier, but hopefully we can call out a lot more retailers after we get through this with some new banners.
So 100,000 authorized stores is on the horizon.
Yeah, I think so. We'll see how it goes. Obviously, it's up to the buyers, but I think that's probably reasonable, as we look after all these resets get set. I think that's, what we expect. And I think it'll be a good thing, and there's a lot more. It could be more, especially on the next resets. It takes time for these retailers. But the one thing is, and I talk to a lot of investors as well and fund managers, if you're a fund manager, you're always watching the S&P, right? So if you're not beating the S&P, you likely will be
out of a job.
You won't have a job. They're going to find someone else to manage the fund that can beat the S&P. The same thing goes with buyers, right? So these buyers rotate and all the time because of the retailers. But if the buyer's not beating the S&P 500, which is the Nielsen scan data for the energy category, you're out. And in order to keep up with that Nielsen scan data in the energy category, you got to bring in Celsius. I mean, it's clear. We're outpacing the category by 8 times in convenience and drug. So you have to add more of Celsius if you want to really keep up with that S&P 500 growth rate or Nielsen scan data growth rate. So, it's moved from a emotional selling story back in the day. I've been here over 9 years, and now we're selling a financial selling story, which is much easier, which we all know. Is every brand is paying their fair share of rent? If not, Celsius pays a premium. Put it in the cooler.
Right. What does a typical can cost in a convenience store, retail store? Do you guys have an MSRP for this?
Yeah, it's right around, it depending on the retailer, $229 to $259. In some markets, you'll see $279 as well, but very comparable. Priced a little bit less than Red Bull, right above Monster. So, definitely feasible. We want to keep a premium position, so we don't want to be priced, down by Amp and Rockstar and those, but really key on keeping a premium position. It's a premium brand with premium ingredients, so we want to keep it that way.
Right. I mean, obviously, a lot of people are buying 12 packs, right?
That's correct. Yep, 12 packs is the bulk of our business. We do have 6-4s as well that do really well, but the bulk of the business today is 12 packs, loose signals, and the multi-packs. We think Costco, as you mentioned, a 15-pack is going to be great. A lot of take-home packs, I think, will continue to increase, as things move forward and we continue to build this brand out.
So last question, by the end of this year, how many branded coolers do you think you guys will have in stores? Any rough estimate in your mind, or what would be a target for you?
Well, I'm pushing the sales team and our team members here. So we like a lot of coolers, but right now we've said 1,000. We got on order. We're going to work on placing those. And as quickly as we can get those placed, we'll work on the next round as soon as the algorithm holds. But, it's not easy. It takes time. It's, it's a lot of work setting these coolers up. But 1,000, I think about half of them are already assigned to key accounts. So that's
Awesome.
Great. And we could have more, but only stated 1,000 so far. We'll come back next time.
Okay. Thank you, John. Really appreciate your time today. Great interview. Look forward to see what you guys do next. I'm still super bullish. So if the stock pulls back anymore, I guarantee I'm buying some.
Excellent. Cheers. Thanks for having us.
You got it, man. Have a good one. Bye-bye.
You too now. Thank you.